video is on the 2022 manufacturing account question. So it is for a company called Guigan. So we're going to do it in 5 steps as always. Step 1, lay out your accounts, which will take 5 or 6 minutes. Step 2, transfer your figures into the accounts from the trial balance, which will take 6 or 7 minutes. Step 3, calculate investment income and debenture interest for the year, which will take 3 or 4 minutes. Step 4, complete your adjustments, which will take approximately 32 minutes. Step 5, tot up the totals, which will take approximately 5 minutes. So in total there, it would be 54 minutes. Okay, so looking at step 1 first. We'll just show you an example of one that was done earlier, so you can see that all the workings are done on the face of the accounts. It's absolutely fine in question 1 to do that. So it just reduces the amount of time you're spending flicking over and back different pages or making mistakes when you're transferring, etc. So let's get stuck in step 1, lay out your accounts. So you can pause the video now and copy out the layout. So it should take you no longer than 5 or 6 minutes. Okay, step 2 then is transfer the figures into the accounts from the trial balance, and that will take 6 or 7 minutes. So here we have the trial balance and then all of the adjustments. So we're just focusing on the trial balance during this step. Now, at the top of the question, it tells us about authorised and issued shares. Okay, and they are going to go into the balance sheet financed by capital and reserves. It's important to also note that the assets and expenses are on the debit side of the trial balance and that liabilities and revenues are on the credit side. There's a couple exceptions to that rule, which I'll show you when we get to that point. Okay, so just looking at where everything else goes, our plant and machinery will go into the balance sheet tangible fixed assets, factory buildings, same place. Hire special equipment will go into the manufacturing account, as will general factory overheads. Stocks on hand, we'll have the raw materials and work in progress going into the manufacturing, and we'll have finished goods going into the trading account in the TPL. Direct factory wages will go into the manufacturing, as will purchase of raw materials and royalty payments. Sales scrap material is also a manufacturing item. Selling expenses will go into the trading profit and loss, selling and distribution expenses. Admin expenses will go into TPL admin expenses. Sales will go into the trading account. Discount, because it's on the credit side, that means that that is discount received, okay, because that is a revenue there. So if the discount was on this side, that would make it an expense in the selling and distribution, but because it's on the credit side, that means that it is a revenue. Okay, so TPL, add operating income there. The rent is the exact same thing. It's also a revenue, okay? So that rent received in add operating income. Then you've got 4% investments. That's going to go into the balance sheet investment income due. So investments themselves, financial fixed assets, investment interest received. That is the amount that we have received this year for the investments. Now, it is not the amount that we are due to get, okay? It is not the amount that we are due to get. We will be owed more investment income at the end of the year. So this figure will help us establish how much of investment income is due at the end of the year. The profit and loss figure, when it's on the credit side, it is a profit because profit is a liability to the owner. The business owes the owner back that profit. If it was on this side, this is a loss. Okay, so that's a loss. Okay, then you have PAYE, PRSI and USC 1850 on the credit side, so that's a creditors minus 1 year. 8% debentures is balance sheet creditors plus 1 year. Then you have the debenture interest paid. So debentures for the year, okay, we will work it out later, but it will absolutely, the debenture interest will be more than €5,000 this year. So we will have some debenture interest at the end of the year that we are still yet to pay, okay? So with that in mind, that's going to help us figure out how much debenture interest is due at the end of the year. Then we've got bad debts provision on the credit side. So bad debts provision on the credit side, all right, That is one of my exceptions to the rule. This is not a liability or a revenue. It is the asset debtor being reduced. So it is a contra asset. Okay, so the asset debtor, the 76,350, is being reduced by 3,050 because that is how much we think we're not going to get. Okay, so bad debts provision, going to take it away from debtors. Then you have dividends paid at the bottom of the trading profit and loss. Then you have the bank. It's on the credit side, so that is going to be balance sheet creditors minus 1 year. Then you have debtors and creditors. So debtors on the debit side, 76,350 euro, going to go into current assets, and then creditors will go under creditors minus 1 year. Then you'll have issued shares, you'll have your ordinary shares, and you'll have preference shares. So 460 and 150, they'll both go into the capital and reserves. So now it's just time for us to slot them all in. So into the manufacturing account, remember we had a few items. So the hire special equipment, that will go into the direct costs. Okay, so 37,800 into the direct costs. General factory overheads will go into the factory overheads. So 126,700. The opening stock of raw materials will go in up at the top. 27,300 is the opening raw materials. Work in progress can go straight in there as well. It's a figure from last year, so it can go straight in. 38,650. Direct factory wages can go into the direct costs as well. Purchase of raw materials into the direct costs also. Royalty payments, also another direct cost. So that is you paying to produce somebody else's product, and then you're going to be selling it. Sale of scrap materials, 18,950. We are going to take that away down the bottom. Okay, so that will be a figure that we will minus away. And that's it for the manufacturing account. So now we have to put the figures into the trading and profit and loss account. So into the trading profit and loss account. So we have the plant and machinery. First bracket, 340,000 is the cost. Second bracket is the accumulated depreciation. So that is the 340 minus the 290 is 50 depreciation that has occurred so far. Then with the factory buildings, it is 890 minus 865. So that leaves us with 25,000 accumulated depreciation. Next thing for the TPL or balance sheet then is opening stock of finished goods, 38,400. The next thing for our trading profit and loss is our selling expenses, 45, and our admin expenses, 57.9. Then we have sales, 165,000. Then we have our discount received into our add operating income. We have our rent received into add operating income. We have our 4% investments into financial assets. We have our investment income received, 2,800. So we're going to have whatever it is for the year, right? So whatever the investment income is, we'll find that out soon, minus the 2,800 that we have received. Next, we have our profit from the 1st of the 1st. Then we have our PAYE, PRSI USC, 1850 in the creditors minus 1 year. Then we have 8% debentures, okay, in the finance buy. Then we have debenture interest paid. So whatever it has been for the year, minus 5,000. Then we have bad debts provision, okay, so 3,050. But we will be taking that figure away from the debtors figure, okay. So you can skip a line if you wish, because you know you're going to be putting debtors in here. Otherwise, it doesn't really matter. You can just draw an arrow and link it up with the debtors. So you have the dividends paid, 27,500 is next. Then you have your bank. It's on the credit side, so that's a bank overdraft in creditors minus 1 year. Then you have debtors, 86,350. Then you have creditors, 61,400. Then you have issued share capital for 160,000. You have 4% preference shares, 150,000. You top that up then and you get 610,000 euro. Okay, so that is step 2 completely done there. So step 2 is just all about taking all of your figures from the trial balance and putting it into the face of the accounts. And you're getting quite a few marks by doing this. Step 3 then is calculate investment income and debenture interest for the year, and this should take you 3 or 4 minutes. So let's just think about our investments again. What is the story with them? So up in the financial assets in the balance sheet, that's where we record your 4% investments for 250,000. Then in the trading profit and loss, this is where we have the investment income for the current year. Okay, so that's where that should go. Okay, and then any investment income that is due at the end of the year, so anything that we have not yet received, that's going to go into the current assets. With regards to the debentures, the debenture loan itself will go into the finance by under creditors plus 1 year. The debenture interest for the year that needs to be charged is going to go into the trading profit and loss account. Okay, and that's just how much is to be charged for that current year. And then any debenture interest due will go into the creditors minus 1 year. Okay, so anything that we are due to pay at the end of the year goes into creditors minus 1 year. Okay, so looking at the trial balance then, we will take a look for our investments and we'll take a look for our debentures. So our investments here, 4% investments acquired on the 1st of the 4th. So we had them for the 4th, 5th, 6th, 7th, 8th, 9th, 10th, 11th, 12th. So that is 9 months. Okay, so it's important to note the date that is here. So the 1st of the 4th. So they had it for all of the 4th month. So 9 over 12 months. So 250 multiplied by 4% multiplied by 9 over 12. That is €7,500. That is what we are due to get for this current year, 2021. Bearing in mind, we only got them for 3/4 of the year, not the whole year. The 8% debentures then, including 50,000 issued on the 1st of the 4th, 300,000. So for the first 3 months of the year, they just had 250,000 worth of debentures. And then the last 9 months of the year, they had 300,000 worth of debentures. Okay, so 250 by 8% by 3 over 12 is €5,000, whereas 300,000 by 8% by 9 over 12 is €18,000. So that is a total of €23,000 altogether that they are due to pay for that current year. Okay, so the 7,500, okay, is going to go into the investment income here for the year, and we're also going to put it up into the investment income due. So we are due to get 7,500 for the year, but we've only received 2,800. So we're definitely going to have some due there at the end of the year. The debentures, 23,000, will go at the bottom of the TPL. And then the debenture interest due, we'll have 23,000 for the whole year, minus 5, that would be the debenture interest due at the end of the year. So this is how our manufacturing account looks after this steps 1, 2 and 3 has been completed. And this is how the TPL and balance sheet looks after steps 1, 2 and 3 have been completed. So you've done an awful lot of work so far. Now we're ready to get into step 4, and step 4 is where we start our adjustments, and this should take us approximately 32 minutes. So looking at the notes here, the following information and instructions are to be taken into account. Number 1, stocks on hand at 31st the 12th, 2021. We've got raw materials 28,300, work in progress 27,600, and finished goods 58. Right, so we'll just actually get into the workings bit by bit. So raw materials and work in progress, they are both going to go into the manufacturing account. Okay, they relate to the factory, they're going to go into the factory account, the manufacturing account, whereas the finished goods are going to go into the TPL account. But all 3 of these are going to go into the balance sheet. Okay, so raw materials at the end of the year, up in direct costs. Then we've got work in progress, closing stock, 27,600 at the bottom. The finished goods is going to go into the trading profit and loss, 58,000 there. And all 3 of these are going to go into the current assets. All right, all 3 of them into the current assets. Right, so next, note 2. No entry has been made in the books for sale of goods to a debtor on the 31st the 12th, 2021. An invoice had been sent for 10,800 which included a markup on cost of 20%. The goods were not dispatched until the 2nd of the 1st, 2022, and were included in closing stock. Okay, so no record be made, sale of goods to a debtor at the end of the year. So we just need to enter these sale of goods to the debtor at the end of the year. And it's saying that the figure, the closing stock figure doesn't take into account that we got rid of these goods, okay? So we sent the invoice to the debtor for 10,800, okay? So that's how much we need to increase our sales and how much we need to increase our debtors by. Now, there was a markup on cost of 20%, all right? So there's 20% profit put on top of this. So this figure here, 120%, okay? So you need to find what 100% is, and then we're going to need to take it out of the closing stock because that stock has left the company now, okay? So that stock has left the company now. Okay, so that there, no impact on the manufacturing account, but in the trading profit and loss and the balance sheet, we're going to add 10,800 to sales. We're going to add 10,800 to debtors. Then we're finding out that the closing stock is worth, the stock was worth 9,000, okay? So we're going to minus that from the closing stock because we have sent that to our debtor. We no longer are in possession of that closing stock. We've sold those goods. So that's note 2. Note 3 and 4 then, we're going to do these two together because they're both about the plant and machinery. So very similar to the delivery vans adjustment, okay? So note 3, included in the figure for sale of scrap materials is €7,000 received from the sale of an old machine on the 31st of the 3rd, 2021. This machine had cost €30,000 on the 1st of the 9th, 2016. Number 4, plant and machinery is to be depreciated at a rate of 15% of cost from the date of purchase to the date of sale. Okay, so lots going on here for plant and machinery. So first things first, right? The sale of scrap materials is not the same thing as the sale of an old machine. Like, it's absolutely not the same thing. And we're told that the figure 7,000 was treated as the sale of an old machine, right? So that is that's completely and utterly wrong, okay? So completely and utterly wrong, we have to take it out of that account then. So we're going to minus that 7,000 from the sale of scrap materials, okay? So it's both revenue accounts, so to take it out, we just minus it. Now, the machine had cost 30,000 on the 1st of the 9th, so we're going to take that 30,000 from the cost of the plant and machinery at the end of the year there in the balance sheet. So we're going to minus that 30,000. So now our plant and machinery costs 310. So at the start of the year, they cost 340. We got that from the trial balance figure, and now it's 310. So we've got that after we sold the machine. So we can now do the depreciation charge for the year, okay? And we can see that we had 340 worth of goods for 3 months of the year because we traded this in on the 31st of the 3rd, okay? So 340 by the 15% that we were told in the next adjustment by 3 over 12, and that is 12,750. Then we have the 310 by 15% by 9 over 12, and that is 34,875. And when we add those two together, we get 47,625 euro. So 47,625 euro. Now, what we can do then, we need to kind of work out, did we make a profit or did we make a loss on the sale of the old machine? Okay, so our formula is, as always, it's the cost of the old machine minus the accumulated depreciation on the old machine, and then that is equal to the net book value, and then we will compare that to the proceeds that we got, and then that will tell us whether we made a profit or loss on the sale of the old machine. So the cost of the old machine was 30,000 euro, and we take away the accumulated depreciation. So the accumulated depreciation will be how much depreciation was charged on that machine that cost 30,000 over its lifetime. So 30,000, okay, we need to find out, we're going to be multiplying it by 15%, and we're going to be multiplying it by how long we had it for. So we bought it on the 1st of the 9th, 2016, and we sold it on the 31st of the 3rd, 2021. So that means for 2016, we had it for the 9th month, the 10th month, the 11th month, the 12th month. So that's 4 months of 2016. Then 2017, we had it for the whole year. 2018, we had it for the whole year. 2019, we had it for the whole year. 2020, we had it for the full year. And then 2021, we had it for 3 months. Okay, so that is everything, right? So 4 plus 12 plus 12 plus 12 plus 12 plus 3 is 55 months. Okay, so 55 months is how long they had it for. So we can find out the accumulated depreciation by 30,000 by 15% by 55 over 12. That is €20,625 accumulated depreciation over the lifetime of that machine. We compare that to the net book value. Okay, we get the net book value by doing that, 9,375, and we compare that net book value to the proceeds. So the proceeds were what we got for it, which was 7,000. So 9,375 is what we thought it was worth, but now we only got 7,000 for it. So that unfortunately is a loss of 2,375, which you also would put into the factory overheads. Okay, so that also goes into the factory overheads. So that is the manufacturing account done there. What we need to do now is we need to go back to the balance sheet and we need to sort out what is the accumulated depreciation of the plant and machinery at the end of the year. So what we have to do, we have to add the 47,625 depreciation charge for the current year, okay? And then we're minusing the 20,625, okay, which is the depreciation on the sold machine. So 50,000 plus the 47,625, okay, so plus this, but then minus the accumulated depreciation on the machine that they sold. That gives you then 77,000 total, and 233,000 is the net book value, okay, of that. So the cost 310,000, accumulated depreciation 77,000, net book value 233,000. Okay, so that is all of the plant and machinery. Next then, note 5. The suspense figure arises as a result of discount received 1,400 entered only in the discount account, and credit purchases of raw materials 11,000 which were entered only in the creditor's account. Okay, we're going to look at the first error here first. So the suspense figure arises as a result of discount received 1,400 entered only in the discount account. So we need to say to ourselves, who did we get a discount from? We received a discount. So who did we receive a discount from? So we receive a discount from our creditors. So our creditors give us a discount. So this is saying that discount received only went into the discount account. So it didn't go into the creditor's account. So if we put it into the creditor account now, we would reduce the creditor account there by €1,400. Now that would show that our two sides do not equal. Okay, so what we would need to do to get the two sides to equal then is we would need to minus 1,400. So this item here is on the debit side, this on the credit side. So if we minus 1,400 from the credit side, we have to minus 1,400 from the debit side as well. And then our two sides will equal. So that is the first mistake fixed. Second mistake fixed is credit purchases of raw materials 11,000 which were entered only in the creditor's account. So credit purchases of raw materials 11,000 entered only in the creditor's account. So credit purchases needs to go into the creditor account, which it did, but it should go into the purchase of raw materials as well. Okay, so up into the purchase of raw materials here, we are going to add 11,000. Now this is an item on the debit side, and our item incorporating suspense is also on the debit side. So for this to become equal again, what we're going to have to do is we're going to have to minus 11,000 from our other item on the debit side. So then our two sides would equal. So what we do is we just take the workings now and we just fire them into the accounts. So in the manufacturing account, we're going to have in the general factory overheads, we'll minus 1,400 and minus 11 from the general factory overheads. The purchase of raw materials, we're going to plus 11,000 there. And then the creditors, we will, in the balance sheet, we will minus 1,400 from that. And that is all of our 3 items put in there. So 4 figures all together, but we've put them into the 3 places where they needed to go. And that is the suspense adjustment done there. So adjustment number 5. Adjustment number 6 then said, provide for a recent wage increase of 2% to be backdated to cover the 3 months from the 1st of the 10th, 2021. So provide for a recent wage increase of 2%, so backdated to cover 3 months from the 1st of the 10th, 2021. Okay, so 3 months by 2%, and the wage increase, we have to look at the direct factory wages. So we're going to get a wage increase on that. So we're adding 740 to that. How did I get that 740? Well, I took the 148,000 and I multiplied it by 2%, and then I multiplied it by 3 months over 12, and that gave me €740. Now the words provide for, when we see this, we're always going to know we've something to do in the balance sheet as well. We have not paid this wage increase yet. So we're going to show that in the balance sheet, in creditors minus 1 year, that we have a wage increase due at the end of the year. So that is adjustment number 6 done. Moving on now, to adjustment number 7. So during 2021, so during the year, a store was built by the firm's own employees. The cost of their labour, €60,000, before the wage increase, had been treated as a business expense, and the materials costing €62,000 were taken from the firm's stocks. The building work commenced on the 1st of the 1st, 2021, and took 12 months to complete. No entry had been made in the books for the store. Okay, so during the year, a lot happened. The firm's own employees built a new storeroom, okay? What's happening is they're saying that all of the expenses of that storeroom are currently in the manufacturing account. And actually what needs to happen, it needs to go into the building account in the balance sheet. Now it's saying the building work took 12 months to complete. So that means we're talking about the wage increase. So we have to figure out what the wage increase element of this is as well. Okay, so the 60,000 is not all the wages that it costs. It's going to be 60,000 plus 3 over 12 months multiplied by a 2% wage increase. So we'll work that out. So the direct factory wages, we're going to minus the 60,000, we're going to minus 300. What is 300? The 300 is 60,000 multiplied by 2% multiplied by 3 over 12. Okay, so that's 60,000. Those employees weren't just getting 60,000, they were actually getting 60,300 because of that wage increase that was brought in. Okay, so we will be adding the 60,300 to the buildings. The purchase of raw materials, so the raw materials with regards to the storeroom, we're currently in the purchase of raw materials, so we're going to minus the 62,000 from here, okay, because it shouldn't be shown in the purchase of raw materials, it should actually go into the building. So we're going to put both of these figures now into the buildings account. So we're going to have the 62,000 and the 60,300, or the 60,000 plus 300. Okay, so we're taking it out of the manufacturing account because we do not manufacture storerooms. Okay, if we build a storeroom, we need to put that into our asset storeroom account. Okay, it needs to come out of the manufacturing account and into the balance sheet. So that's your buildings. That's your note 7 done. Adjustment number 8 then. The figure for bank in the trial balance has been taken from the firm's own records. However, a bank statement dated 31st of the 12th, 2021 shows an overdraft of €76,200. A comparison of the bank account and the bank statement revealed the following discrepancies. Note 1. A credit transfer for €3,500 had been received on the 31st of the 12th, 2021 in respect of a debtor who has recently been declared bankrupt. This represents a first and final payment of 70 cents for every €1 owed. Note 2. A cheque for 6,300 received from a debtor had been entered in the books, cash book and ledger as 5,700. And note 3, finally, a cheque for fees of 4,700 issued to a creditor had not been presented for payment by the 31st of the 12th, 2021. Okay, so a little working to do here. So we're going to take the bookkeeper's bank figure from the trial balance. That is on the credit side, so that means that is €85,000 overdraft. We're taking the bank statement's bank figure from the bank statement. So it told us in the adjustment 76,200. So these two bank figures are different. Okay, what we have to do, we have to get the two bank figures to be the same, and we will once we look at all of these adjustments. What we also need to do, we need to look and see what other accounts might be affected here. So number 1, a credit transfer for 3,500 had been received on the 31st of the 12th, 2021 in respect of a debtor who has recently been declared bankrupt. This represents a first and final payment of 70 cents for every €1 owed. So credit transfer 3,500 was received. Okay, so it was received into the bank because a credit transfer would be received into like the AIB bank, right? It'll be the bookkeeper just doesn't know about that. They haven't recorded it yet. So the bank needs to do nothing, but the bookkeeper needs to show that 3,500 came into the bank, and that would reduce the bank overdraft by 3,500. Now we need to think, what else do we need to do in our accounts here? So credit transfer 3,500 received in respect of a debtor who's recently been declared bankrupt. So this represents a first and final payment of 70 cents for every €1 owed. Okay, so 3,500 was money coming in. All right, so we got that, okay, but we're not getting the other amount. Okay, so we're not getting 1,500. That is going to be bad debts written off in the selling and distribution expenses. How did I get that? I got that because the 3,500 is 70%. So if I divide 3,500 by 70, multiply it by 100, I'll know that the entire amount is 5,000 and that the 30% that we're not going to ever receive is 1,500. Okay, so that's how we do the other accounts. Now, discrepancy number 2 then. A cheque for 6,300 received from a debtor had been entered in the books, the cash book and ledger as 5,700. Okay, so this is a complete and utter mistake just by the bookkeeper. The bank, AIB bank, has done nothing wrong, so it won't affect the AIB figure. So what should have happened, the cheque received from the debtor, the bank should have increased by 6,300 and the debtor should have been reduced by 6,300. So knowing our alert diagram, okay, that I'm always talking about, okay, assets increase on the debit, they decrease on the credit, okay. So what happened by mistake was that they just put it in as 5,700 in the same accounts, right? So they put in, the bookkeeper put in a little bit too little. So you're going to have to add 600 to the debit side of the bank. So that would be a plus. We're going to be adding that to the bank. And then the debtor, we need to minus 600 from the debtor, okay? So this is a bank overdraft. So if money's coming into the bank here, that's going to be reducing the bank overdraft by 600. And then we need to enter the 600 being reduced from the debtor's figure. Now, adjustment number 3, a cheque for fees of 4,700 issued to a creditor had not been presented for payment by the 31st of the 12th, 2021. So a cheque for fees, 4,700 issued to a creditor. Okay, cheque for fees, 4,700. So a creditor's been given a cheque. The bookkeeper has given the creditor a cheque. That creditor has gone away and they have not lodged this cheque yet. Okay, the bookkeeper has entered everything. It doesn't say that the bookkeeper didn't enter anything, right? But we need to say what will happen in the bank account when 4,700 is taken from the bank. Well, we will be adding to that overdraft of 4,700. Now, as I said, if these two bank figures equal, we're laughing, and they do. So we've got 80,900 overdraft. So we know that we've got the correct bank figure there. So that is the bank adjustment. Now all we have to do is put it into the accounts. So as you can see there is no impact on the manufacturing account. But into the trading profit and loss and the balance sheet, right, we'll do the bank adjustment here. So minus 3,500 minus 600, that'll be 80,900 in the bank. Then we've got the debtors, we're minusing by 5,000 and we're minusing by 600. And then we are writing in bad debts written off, 1,500 in the selling and distribution. So that is what the bank adjustment looks like then in the accounts once we have that done. Last adjustment, number 9. Provision should be made for the following: investment income and debenture interest due. So we're lucky because we've already got loads of the workings done for that, okay? So we have got investment income due, 7,500 minus the 2,800 gives me 4,700. So 7,500 minus 2,800, 4,700. Our debenture interest due then, we've got 23,000 minus 5,000, that is 18,000 euro debenture interest due at the end of the year. Okay, note 2 then, provision for bad debts to be adjusted to 4% of debtors. Right, so just to remind ourselves what provision for bad debts is. Provision for bad debts is us saying, okay, of these 81,550 euro debtors, when we tot that up, that's what we get. Of them, we think that 4% of those debtors might not pay us. It hasn't happened yet, but we think 4% might not pay us. So that would be 3,262. We think might not pay us. Now, when we compare that to what we had originally, 3,050, that unfortunately, that's not great because the provision for bad debts has increased there. And that is an expense. So 3,262 minus 3,050 is 212, increase in bad debts provision, 212. So that is it. Note 3 then, depreciation on buildings at a rate of 2% of cost per annum. So our buildings, right, we had a few things happen in our buildings here. We had 890 at the start from the trial balance, right, Then we added 60,300, which was salaries for people who made the new store. And then we had 62,000 materials. When we multiply that by 2%, we get 20,246 euro. And then that will be added up into our balance sheet here. So in total then, we've got 25,000 plus 20,246 accumulated depreciation. So that gives us 45,246. The cost of our buildings is 890 plus 62 plus the 6,300. And then that's given us a net book value then of 967,054. Okay, so 967,054. So that is all of our adjustments done. All you have to do now is tot up the total. So this is what your books are looking like currently. You just have to bring everything across, okay? Tot up all your brackets, tot up all of your costs. You know, you're going to take away your work in progress, you're going to take away your sale of scrap materials, and then you get 104,786 is the cost of manufacture. So remember, you're adding all of these together, but you're taking away the stock of closing stock. You know, you're taking away the work in progress closing stock, you're taking away the sale of scrap materials. So otherwise, though, you're adding all of the costs up. So that's 104,786. Now you're going to do all of the trade profit and loss and the balance sheet. So you're just totting everything up here. Okay, your profit and loss balance then at the end of the year, 566,452, which will go into your balance sheet. You're totting everything up. Your total net assets, 147,6,452. then you have 1476452. So that is the 2022 manufacturing account Guigan Ltd complete.